Joining me right now is the Kadina Group president, Gary B. Smith. And Gary, it's good to have you on the program this morning. Would this be a big deal for markets?
Well, I certainly think the perception of this being a great deal will be good for the markets. In reality, even if all the tariffs were imposed or all the tariffs were removed, I think the effect on both, we're talking about almost 30+ trillion in GDP. The effect will be minimal, but it's a kind of a feel-good news. I've always discounted the effect of the tariffs, but listen, I'll take any kind of good headline news. That certainly helped the market.
Well, it just feels like that's one of the issues that keeps coming up as sort of an uncertainty or an unknown for markets. So once getting that clarity in place, I imagine, is a good thing. What about earnings? Let's talk the backdrop for a moment here for stocks, because our earnings and the economy, obviously the backdrop, we've got the jobs number out at the end of the week. Major retailers, Target and Kohl's, reporting earnings tomorrow. Got DoubleTree out on Wednesday, and then Costco on Thursday. The February jobs report is out Friday. The economy expected to have added 180,000 jobs in the month of February, with the unemployment rate edging lower to 3.9% is what we are expecting. This report, what's priced into the market?
Well, I tell you what, based on the fact that almost since Christmas, the market has been up almost 20%, I think 20% plus, depending on what average you look at. I think almost everything is priced into the market, Maria. That's my only, I guess, fear of this market, that we've had this straight-up rally. Every piece of good news is priced in. It doesn't seem like the market's thinking about any other shoe to drop. A China deal goes astray. The Mueller investigation reveals more skeletons than we thought. Brexit goes sour. Maybe I'm being a negative Nelly. It seems like everything good is here, but there are a lot of good bones to this economy, so maybe the market can keep going north. I would prefer, quite honestly, to see the market move a little sideways, kind of price in good and bad before we keep propelling straight up. But, you're kind of right. Everything you laid out there seems to be going quite well.
Well, then we got the Atlanta Federal Reserve out with its estimate for the first quarter GDP on Friday, and it is 0.3% growth for the first quarter from the Atlanta Fed. I mean, this number tends to change a lot, but this is not a good number for the first quarter, and I imagine it's largely due to that shutdown.
Yeah, no, I agree. The numbers more and more seem to be kind of pivoting from quarter to quarter. I think the thing that was most gratifying, though, is despite the good growth, despite the good earnings, inflation seems to be kind of non-existent. Maybe because people have so many more choices now. If prices go up in one area, they shift to another area. But regardless, it means the Fed is kind of holding down on any further rate increases, hopefully because they see the same thing, almost very little inflation. That's good for the economy.
Yeah, real quick, are you buying stocks here, or do you want to avoid?
No, well, I'm definitely, I'm a momentum trader, so I'm buying stocks, based on earnings. I think, the key thing you hit on is those retail earnings coming out. I'm going to be taking a look at what what I call the big box stores like Costco are doing. Also Target. I think that's the key area customers are looking to spend. That's where I'm spending my retail money. I can't remember the last time I went to a department store, but certainly I go to Sam's, which is Walmart, and places like that. That'll be interesting to see what they can come up with.
All right, Gary, good to see you this morning. Thanks so much.
Nice.
Gary B. Smith
Thanks, Maria.
joining us there.